Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome and welcome back, KS family. Let's run the numbers. Bitcoin currently down 2.8% to 37,847. Ethereum down 2.19% to 2518. From my 30 plus years in financial markets, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. We can see the markets are really red right now, so what's actually going on? Quite a few people have reached out to me directly on the direct message function in Twitter and just expressed their concern about the EU Parliament vote tomorrow about potential Bitcoin banning. And it doesn't take too much to look through the market and see that a lot of people are getting concerned about it. Before we dive into it, I want to share Rule 570 with you. It's really important rule. Psychology sets profitability. It doesn't matter if you're investing or trading, because we know all investors become traders anytime they buy or sell. It's your psychology which will dictate your profitability. Crypto technical analysts scientifically track investor attention, but they have bulletproof psychology. I'll explain what it looks like to not have bulletproof psychology. When people first get into the crypto market, they enter Zone 1, the panic zone. Zone 1 is a way to lose money. Zone 2, the blame zone, is also a way to lose money. Zone 1 and Zone 2, and remember these four zones are the stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 1 and Zone 2 are all about certainty. There is no certainty inside financial markets. If people come up to you and say, wherever they are, on Twitter or YouTube or wherever, and they say 0% risk, run as fast as you can. There is no such thing as 0% risk when it comes to investing and trading. Zone 3 is all about probability and rules. I'll just explain a little bit more about the panic zone and the blame zone because they're really important to understand. Basically, when people panic, they see the market going red and they sell on the red. They typically buy on the green. So as the market is going up, they're buying. And when they see some red, they typically sell. This is the opposite way of what people do inside Zone 3. When we have probabilistic fearlessness, we know the rules of making money. We actually buy on the red. I think a little story could actually help out. There's a story called Chicken Little. A lot of people already know this, but I'll summarize it. Basically, Chicken Little was standing underneath an acorn tree when an acorn hit Chicken Little in the head. He went and told one friend, well, the sky is falling, the sky is falling. A piece of the sky hit me in the head. We have to tell the king, this is no good. And so that friend said, let's go to another friend and tell that friend. So sky is falling, the sky is falling to another friend. And that friend said, oh my goodness, the sky is falling. And they're looking around saying, hey, you know what? The sky isn't actually falling. But they bought Chicken Little's version of the truth. And then those two friends go seek out a third friend. Chicken Little says, the sky is falling, the sky is falling. Oh no, we've got to seek out another friend and tell them the sky is falling. Let's protect everybody. And then eventually all the friends go with Chicken Little to the king. And the king says, oh, Chicken Little, the sky is not falling. An acorn fell on your head. And the king plucked it out. You can use the Chicken Little concept in here. When you see the market going red, the sky is falling, the sky is falling for retail investors, but the sun is coming out for professional investors and traders. So let's figure out why the sky is falling. Just like acorns falling from the tree, it always happens inside every financial market. I've been involved with financial markets for more than 3 decades. They say a bull market climbs a wall of worry. A wall of worry, literally, it's a wall of worry, but it keeps on climbing. The concept is, even in the best of times, there's an avalanche of fear and worry in the market. So what do we see here? Bitcoin banning measure seen too close to call in tomorrow's EU Parliament vote. Well, let's dig into that. Let's quickly go through that article. What we actually see is what is at stake here. The markets in crypto assets, the MiCA framework. That's the EU's legislative package for governing digital assets. There was a late addition to the draft which looked to limit cryptocurrencies powered by proof of work and seek to maintain or implement a minimum environmental sustainability standard and push things towards proof of stake. There's a lot of disinformation that's actually out inside the world as far as how much energy Bitcoin actually uses for what it does. And a number of EU parliamentarians have been pushing for a ban of proof-of-work cryptocurrencies over energy concerns, even if that energy was renewable, because they say, for example, Sweden says that if the energy usage of Bitcoin is renewable, well, other places could be using that energy, so why give it to Bitcoin? The critical thing here, the sky is not falling until January 2025. A lot of times people read a newspaper article or a press article. For example, this Bitcoin banning measure. Banning Bitcoin would be $1 trillion mistake. And he's cautioned, Michael Saylor has cautioned EU lawmakers against it. The concept is people look at it and say, oh my goodness, they're banning Bitcoin. The sky is falling. The sky is falling. The first question you should ask if you feel that way, and definitely the market does feel that way right now. We can see it in the market's personality. The market's turn red. It's embarrassed. So that first question to ask is, when would the sky fall if the sky did fall? And the answer is about 3 years from now. So what's actually driving this? Where did this thing come from? So the Greens and the Socialists have been criticizing proof of work concept. And this is very much tied to when China banned Bitcoin crypto mining in May of 2021, citing energy concerns. I don't know what's really wrong with people. The concept, China banned cryptocurrency because it introduced the digital yuan. And as an authoritarian state, it could do so. It didn't want any competition to its digital currency. That's why it fabricated these concerns. And it is a fabrication, and I'll prove it to you. If we look at August 7, 2021, and compare the Bitcoin energy usage to, for example, residential buildings or the building construction industry or non-residential buildings, we can see it's absolutely tiny. When people talk about Bitcoin usage, you would think it's taking the entire energy of the planet. Masterclass students, this is in TR11, Bitcoin energy usage, inside the Masterclass. What happens is that people take things out of context. For example, if we look at Digiconomist and look at Bitcoin Energy Consumption Index, we can see, oh, it's going up. It must be bad. It's energy consumption. Look at all this waste. Look at these high figures. I don't even know what they mean, most people would say. Look at the carbon footprint. Oh, it's out of control. We must ban. But what's happened is there's no context in that figure. You're looking down here at this tiny little one, this tiny little guy, 79. And when you compare energy use from passenger road vehicles, look at the difference. Are we seeking to ban passenger road vehicles, road freight services, shipping, aviation, other transportation, rail transportation? If we apply this logic, we should be seeking to ban all of these things, not just Bitcoin. And when we turn to greenhouse gas emissions, why aren't we banning the finance and insurance sector? Because it certainly uses a lot more than Bitcoin, and Bitcoin does what it's doing. And why don't we have the same concerns for the gold industry? But then there's another really, really important point. 65% of all energy used to generate and distribute electricity in the US is lost or wasted. This is absolutely correct. Why don't we actually go into how we generate our fuel, our energy, and actually decrease the wastage? 65% wastage is a lot. And from the Bitcoin Mining Council, global Bitcoin mining consumes 3.2% of the electrical system energy wasted or lost in the US. That's just one country. And every single country loses electricity through its grid network. We can also see that Bitcoin mining energy use is only 0.142% when compared to the world's total energy. It's really tiny. A lot of people compare it to different countries. But what is Bitcoin really? It's the next evolution in the internet. It actually takes the internet, Web 2.0, and turns it into Web 3.0. It actually turns the internet into the internet of value. To ban Bitcoin, for example, would be akin to saying, let's ban the internet. And you know what? They tried it. Back in 1993, I was running an internet service provider. That's all the way back here. Wow, that's quite a few years ago, isn't it? The concept is that I saw the parliamentarians, the politicians, trying to ban the internet. Can you imagine that? 30 years later, we look at it and say, ban the internet? Why would anyone ban the internet? Trust me, they tried with all of their might. But why did they try? Because the government made a lot of money from their postal services. You remember those things, those stamp things that we don't use anymore? Yeah, they made a lot of money from that. And the telecommunications companies, they also made a lot of money. And the internet actually bypassed or disintermediated both industries. Now, if we fast forward, has the internet actually helped or hindered our race? The internet has become such a normal part of our lives, we couldn't even imagine if we turned the internet off what that would actually do. And just think about it, all the government services have now gone online, and they actually need the upgrade to the Internet of Money to actually facilitate the next evolution in our species. You can just think about it like this. When we go between planets, interstellar travel, are we going to fish a note, a paperback note or a plastic note out of our pocket? No, we won't. We'll use digital cash, and this is the way that everything is going right now anyway. So it's really important to bear in mind, they tried to do it with the internet. They didn't succeed. It doesn't mean they didn't get close, but they didn't succeed. I think it's really important to have a concept of what is actually the thing that we're referring or comparing something to. If people want to ban Bitcoin, ban the banking industry as well. Greens and lefts, set your targets on the banking industry. And while you're at it, potentially passenger transport would be a good thing. And how about we tackle the loss of waste in the electrical power grid? These are the things that would make a big, big difference. That's where the focus should be. Why is it on Bitcoin? Maybe a potential way to look at it, you can look at it as though this is just the new internet, and the people that are getting threatened, the banking system, is obviously jumping up and down and paying a lot for politicians to say, oh, we need to ban this. This is exactly what happened in the telecommunications industry and, of course, the postal service industry. Industries come and go, and this is something we must always bear in mind. But just think about the telecommunications industries absolutely thrived with their adoption of the internet. They didn't go backwards, they actually went forwards. And the banks can do exactly the same thing. But the problem with banks is that they're very, very slow to act. They're very risk averse, and they're focused on scarcity, which basically means their psychology is all about risk. They have to stop risk. What is the best way to stop risk? Don't do anything. Just kill anything that comes up and looks like it threatens the industry. I have first-hand experience in dealing with the banking system, and coming from a finance background, I understand how they think. When it comes to renewable energy and sustainability inside the power mix, you can see global Bitcoin mining is amongst the most sustainable energy usage out of everything. And when compared to entire countries, you can see it paints a really good picture. Crypto, Bitcoin, is taking a lot of notice about being sustainable because it's been one of those barriers put in front of it. It's just something like, for example, when any time a government wants to attack crypto, they have to attack Bitcoin. How do they do that? They say it's used by criminals. Well, that's a fail because it's an immutable public ledger. That is, that you can see all transactions on the blockchain. So what sort of dumb criminal would say, I'll just leave all the footprints of money that I take from other people on an immutable, which means forever, infinite public ledger? That's just dumb. So they don't do that. So that's a bit of a fail. So what do they do next? Oh, okay, it's what can we think of? Oh, it's energy usage. It's energy usage. And you can see that's just not the case. What about anti-money laundering and counter-terrorism finance? Yeah, immutable public ledger again. But that doesn't stop politicians from trying, and it is the politicians that are doing this. What you actually see is because we're so early in the adoption process, the adoption cycle for crypto is just taking off. It hasn't really even started. We're so early. This has got decades to play out. But the politicians realize that most people don't even know what crypto is, so that they can basically say anything. Thank goodness we have such a strong community, such a strong crypto community across the entire world. We need it to fight the ignorance and the vested interests of these policy makers, and we definitely need to come together to do that. If we go through a few more news articles, Europe MiCA's crypto rules submitted Econ Committee to vote in mid-March. The latest version of the draft framework does not feature a controversial provision that could have effectively prohibited cryptocurrencies like Bitcoin that rely on proof of work mining. I'll just go into this a little bit. What other cryptos rely on proof of work? Just to give you a bit of a feeling, a few other cryptocurrencies that rely on proof of work, of course the major one is Bitcoin. Ethereum is transitioning to proof of stake, but it's not quite there yet. It has one stage completed. There's two more stages. I'll go over that in a tick. Bitcoin Cash, Litecoin, and Monero are some others. For Ethereum to translate, it has to have the beacon chain, and that's now live. It needs to do a merge with the beacon chain and put shard chains in. That's estimate 2023. The merge is estimate this year. So when we talk about 2025, if, for example, that legislation got passed, that would be incredibly valuable for Ethereum. What the top players would do, they'd start to translate their holdings in Bitcoin into Ethereum. And we know Ethereum has been very, very hard hit with this particular price decrease over the past 3 months. The thing to note is the geopolitical landscape has changed quite recently. When we look at the number of shorts that have come into Bitcoin recently, they sparked up very, very high. And it's quite unusual, the fact that the shorts are now exiting and the price is going down. It just generally doesn't happen this way. As the shorts come out of the market, we tend to get a push up. What's actually happening is the longs are increasing at a decreasing rate. The longs are getting a little bit scared about this Bitcoin ban. And you know it's not going to happen tomorrow if it actually did happen. But what's the issue here? There's a spanner in the works that we must pay attention to, and that's Russia. When it comes to the EU, to the Economic Union, they're very dependent on energy from Russia. And because of Russia's invasion of Ukraine and the sanctions that are being placed by EU and other countries, there is substantial pressure on the energy infrastructure. This could be helpful to understand. Bosnia, North Macedonia, Moldova, all 100% reliant on Russian gas. Finland, Latvia, up there. Serbia, Estonia, Bulgaria, Slovakia. You get the idea. Some countries are almost completely dependent on Russian gas. So despite the sanctions, there's been doorways opened so that these particular countries can get their gas supplies. From looking at the European Union, we can see 30% of Europe's gas comes from, or the European Union's gas comes from Russia. And then we can see 40%, so Germany is highly dependent on Russian gas. But the thing to understand is that it also goes the other way. When we're looking at Russia's crude oil and condensate exports, this is in 2020, just a little bit old, but it gives some sort of idea. To the OECD, Europe, 48% of those particular exports are happening there. To China, about 31%. And you can see not much in the US and not much in non-OECD countries. We've seen that Europe's gas market is very reliant on Russian supply, but if you look across to Europe, to Europe as being the source of exports for Russian gas, Russia is almost completely dependent on Europe for those exports. See, it cuts actually both ways. And when we look at who supplies Europe's oil, the top two are Russia, followed by Norway, followed by Saudi Arabia, Exxon in the US, Libya, US, Chevron, Algeria, Russia, and the Netherlands. If the MiCA framework went to vote before Russia actually went to war with Ukraine, it would be a very different outcome. We need to be aware that geopolitical events do change public and private sentiment. As crypto technical analysts, to understand how the market is playing out, we actually do a lot of collection and stacking of probabilities. If the oil futures were just basically going parabolic, we would get a little bit worried about Europe's energy security. We see absolutely the opposite of that at the moment. Oil prices have come down quite substantially. And then when we look at geopolitical risk, the gold price has come down substantially too. These are all really, really good signs. This points to a de-escalation of the Russia-Ukraine situation, and that's good for everyone. We can see the bond prices also coming down. The fear gauge, the VIX, inside the main market in the US came down, but it's had a little bit of a spike up, and we can see the NASDAQ 100 is still under resistance. Inflation is not transitory. We can see the 5-year break-even inflation rate is going bananas. It's going parabolic, and this will actually throw a lot of stress inside the financial system globally. And we can see that the DXY, the US dollar currency index, is seeking to take out its previous high here, and yields are coming up. What we basically see is the market saying, okay, I think this Russia thing is not as bad for financial markets as we might think. But however, there are some systemic problems, hard to say, and the markets are still under resistance. So there's a bit of a flight to safety. But not so much that the bond market is going crazy, and this is really important to understand. We do deep dives in the CryptoTradingKS Masterclass. We know no alt can escape Bitcoin's gravity, so when you see your beloved alt coming down, you know Bitcoin did that. That's what Bitcoin does. It drags alts up and down with its gravitational pull. What we can actually see, there was a bit of fear inside the market, inside the crypto market, and it's quite unusual because the shorts are coming out of the market. They're kind of giving up. Generally, we get a big rally when the shorts come out of the market, unless the longs are coming out of the market too. And I think there's a lot of Chicken Little behavior going on right now. And this is pretty normal stuff because a lot of people inside the crypto industry are just new to it. When people enter Zone 1 and Zone 2, they obey all the rules how to lose money. Zone 3 is obeying the rules how to make money, and Zone 4 is obeying the rules of how to keep money and how to actually have a beautiful life in the process. When we look at the charts, and that's what we do as crypto technical analysts, we see geopolitically there's a bit of stability returning to the markets. That is really, really good because we saw a big sell-off in crypto because of the instability. And we Actually, if we look at the gold price overlaid against Bitcoin, that is also coming down at the moment. I think all that's happened realistically is the market just put people into a bit of a panic. But absolutely, if they understand that this legislation, even in the worst case scenario, is many years away from actually impacting the market, that would be very different. It doesn't mean that the market can't calm down more, and the concept is that we're always doing our three-way probabilistic choices. We know ahead of time what we will do if the market comes down, goes sideways, or goes up. That is part of the training of being a crypto technical analyst and scientifically tracking investor attention. You can see how important it is to actually dig beneath the news story. News stories are by nature really sensationalistic. They're designed to elicit an emotional response, and that response is generally fear. That's why when we look at the crypto market and we see it all red, that is the time the crypto technical analysts in Zone 3 step in. They're actually layering their buys. For example, in yesterday's episode, we talked about XRP, and we had a level 78.97 as a buy level. We also had 73.75, 67.34. We're just coming down closer to the 73.75 level. This is how professionals absolutely enter trades, and we know all investors become traders anytime they buy or sell, so the key is to do it really well. If you haven't had the opportunity, please have a look at episode 459, Bitcoin and Key XRP News, and profitable XRP trade levels. Around the 2646 mark, you will see how we look at percentages from a professional perspective. It will be quite eye-opening. All professional traders and investors know that they must short-circuit the Chicken Little pathway to the brain. When they see negative news or things looking really bad, they have to dig. They have to look at the research. They have to see when the Chicken Little date actually is. Is it today or is it in 3 years' time? And then they have to look more deeply into what might happen. So for example, say that this legislation goes through and it does ban proof of work. What would be the ramification of that? Crypto technical analysts have to answer these questions. The question is quite simply answered. The money would flow from Bitcoin to Ethereum because by that time Ethereum will have been transitioned to proof of stake. This is very, very positive for Ethereum. And just remember that Chicken Little date is January 1st, 2025. To put that in context, it's 1,024 days away. It's not tomorrow. But a lot of people would light switch. They'd go all out and they would say, oh no, Europe is banning Bitcoin. I have to sell everything. And who are they selling it to? They're selling to Zone 3 people, professionals. It takes a lot of rules to de-wire Zone 1 and Zone 2 thinking. The light switch going all in and all out. Buying on green, selling on red. These are natural things to do. Your biology is set up in such a way as to make you fail when it comes to investing and trading. That's why the real wealth section is so critically important. But many people don't understand that. They just think it's all about a buy level and a sell level. It is not. You need to apply emotional restraint and emotional discipline to hold your buy levels and to hold your sell levels as well. It's literally a mind game. That's why this real wealth section is so critically important to understand. The best way to say it, the only way to get out of Zone 1 and Zone 2, the panic and the blame zone, where you suffer horrendous stress, sleepless nights, major losses, so much anxiety, is through rules. You need a lot of rules to understand. Please let me know in the comments what you think about MiCA and what do you think about banning of Bitcoin. It's a really interesting topic to discuss. And also, where do you think Bitcoin is actually headed? Are you bullish or bearish? I'd love to hear your thoughts. I hope you found the content useful. Please consider sharing and liking this video and subscribing to the channel. Thank you very much to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and being a part of our global KS family. I've left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.